So, it's currently Monday. Not even Monday, but midnight from Tuesday, sorry, of week 2. And I'm currently doing, as you can see, Tuesday. Already Tuesday because it's midnight. And I'm going to do the past weekly candlesticks. So, week 1, this Monday, this candlestick from 1 of Monday to 5 of Friday, which was, sorry, I'm a little bit sick, so I might cough a lot. So I'm going to do that to stay this discipline. Fuck, I never know how to say that word in English. Discipline, discipline. I don't know, but that's the whole idea of this video. Going to do a week recap after doing some notes from the past week. And the first thing before even starting the week. So I didn't yet started the week 2. So I'm going to finish this and then start the week 2 of April by the same way that I'm now going to recap the previous week 1. So I grab this notepad and I just answer these questions, which I think that are essential and they are the only thing that I need before then I engage on day trading or weekly, intra-weekly trading. And those are on the screen. And I'm just going to read my notes, then go back onto the charts, talk a little bit. I don't think that I'll be doing it a lot longer, but I'll be doing it uh, more shorter than usual because it's a little bit late and I need to go to sleep. So these are the questions. The questions. Going to make them smaller and to my left right here. And then we can see the news, and then after the news are done, and I'm then going to go to the charts. Why was I expecting X, Y, and Z, and so on, so on. This is the current week 1 candlestick, where you can see price closing a little bit above this opening price, which was the week 1 opening price of March, followed by that expansion on the upside, which is then followed by this reversal, making the high of the month for March, then followed by the low of the month for March, which was taken on this current week 1 candlestick, before then trading higher above this week 4 high into this fair value gap coupled with this order block, before then closing below this order block on itself. So now going into this and to the questions. Is it, is it going to move or is it going to stay quiet, do nothing? Based on this news, NFP, okay, it's going to move a little bit. Okay, Monday news, which tells me that Monday can expand, especially if Friday consolidated. So that if I go into the daily chart, did Friday consolidated? Yes, Friday consolidated, coupled with Monday news. So it's important, coupled with Monday's news, and we can see that on Monday price delivered around 68 pips lower immediately after this Friday consolidation. So that's a quick and this way to determine if you should trade Mondays or not. I usually don't trade those, and I couldn't trade the past Monday because I was not even starting the week in itself because I was late. I was undisciplined. So fuck. Just give me just 1 second. Discipline. Oh, it's pronounced
Disciplined.
disciplined.
disciplined, disciplined,
Okay, discipline. That's
disciplined,
disciplined. And so I wasn't disciplined, and then I was late, and I'm going to read that. So first question, is it going to move or it's going to stay quiet, do nothing? And my answer to that, I'm sorry, was I joined it. So the first point, it's like the first tick on my notebook, and it's saying I joined this week later. It's now on Tuesday PM session, and I'm doing all of this because life is great. I'm glad that I'm doing it. Then it's going to move even with Monday news to help. So I'm already mentioning that this week is going to move a lot. So to be exact, if I'm doing this on Thursday PM session, means that the next day is going to be Wednesday. So I was already late to see that Monday expanded lower and that Tuesday did this reversal and then traded higher. So I was only seeing the week based on this. So this for me, this gray box for me was unknown, while this was my information about the charts, which was at Friday consolidated, coupled with news, expanded lower on Monday, coupled with news, in that sense, not Friday with news, but Monday with news, expansion lower, it's a week one, NFP, so on so on. Tuesday, turtle soup before trading higher. After a Monday, immediately expansion lower below the weekly open, below the weekly open, on a monthly open as well, because it's also the monthly open, with the DXY turtle soup, right? Where on Monday, if I'm not sure, yeah, where on Monday price turned into the Q1I, which wasn't seen on Monday on EU Monday trading into the Q1 low. Same thing on GBP, where the Q1 low wasn't also reached too, so we can see divergence on this aspect. So that's a quick mentioning why what I was seeing when I was uh, making these notes on my notebook, because I don't want to be Einstein guru or something like that. I'm doing this. I'm doing this. I don't need to do this. I can do this and record only for me, or don't only write my weekly recap. But I think that's a good thing for me to better my English, better my phrasing, better my trading, better my have some experience on talking and mentioning these things. So I already mentioned that it was going to move a lot, but because it's a weak one, I'm more elected to see range bound, not range bound consolidation, but some ranging candlestick with big wicks and small bodies. And we can see that indeed we have a not a that there was like a 50-50 candlestick, if I might say so. Not a unknown, but a 50-50 where it's 50 wicks and 50 bodies, which is an equilibrium slash a balanced candlestick in some sense. So there's a lot of red news coupled with an FP, and right after acknowledging if it's going to move, you need to know in what days is price more likely to move and have a lot of volatility. And I mentioned that there are a lot of news on Wednesday and Friday NFP. Followed by that, you need to go where it's going to move. So you have a baseline for the weekly candlestick. What does this mean? This means that we have a baseline of if it's if the week is worth trading. If it's an inside week, no worth trading it. I found that based on experience. So right here, don't trade an inside weekly candlestick. So I know by experience that it isn't worth it trying to trade uh, inside candlestick. It's very low probability, but I know that the other candlesticks do not are higher probability. So if on the point one you say that it's going to move a lot, then it means that it's not going to be an inside candlestick, because inside weekly candlesticks do not move a lot. So this is then followed by after you know that the week is going to move and it's worth your mental capital, your eyes, because looking at the screens, uh, they wear off your eyes, then you need to know in what days are you more likely to see a low of the week, eye of the week, a first change instead of delivery to make the candlestick high or candlestick low. And those days are usually the highest probability days, and also the not the easiest, but days that you want to focus on day trading. So I mentioned that I'm going to focus on Wednesday and Friday at FP because I'm looking for a more range candlestick, like a week one candlestick with big wicks. So a lot of movement, but it's like if price is below the weekly open, it's then going to quickly expand higher above it, the weekly open, and then if it's above the weekly open, it's then going to trade back lower. So it's always like a blue weekly open, it's going to immediately trade. It's always ranging, so it's rejecting lows and rejecting highs and going back to the weekly open, creating a range slash accumulation candlestick, which was my basically idea. So then, where is the weekly candlestick likely to go? I mentioned that I would like to see price drawn lower into the key one low, which key one was an inside candlestick on EU. GU on GU, I'm looking at December lows. This means that I'm looking at this low on EU, this low on GU, the Q1 low from the start of the year. Yes, right here, start of the year to 1/2 of January of 24, which was already met on on the XY, meaning that I was not anticipating but really trying to pursue a continuation, expecting this to be a turtle soup to then the XY continue higher, and in EO expecting this to be a turtle soup to then continue lower, if I may say so. It's not exactly expecting this because it was Thursday, Tuesday when I made it, so it was around here, and on Tuesday I will be expecting like the weekly open and this consolidation to then trade lower. That's basically my whole objective, but sometimes you are not right, and that's completely fine. Going back into the what's the next thing? Is there any daily time frame around liquidity to back up for that weekly bias? And yes, my daily any daily lows formed on this week on EU, I want to view it as a magnet low and low as a magnet slash low hanging fruit before that time frame objective. Does this mean? So if indeed I was correct for this week, then any of these lows were going to be viewed as an objective. So Monday low was an objective, Tuesday low then was an objective for Wednesday, and so on, because I was looking for price to continually straight lower into this objective right here. So I was looking at this low, meaning that any low made, so any this low right here, this low, not this, this low on Monday, this low on Friday, this on Thursday, this low right here. So any daily low, 4 hour low, 1 hour low, you want to look at as a drawn liquidity because your high time frame magnet is this Q2, Q1 low, sorry, and you want to view it as and if this is a time frame, so a monthly slash, in this case it's a quarterly low, then any monthly lows, any weekly, 2 week, 1 day, 3 day, whatever lows you are looking at should be taken, offer a retracement to then continue on the downside. What do I mean by this? I'm going to make a quick draw. So I'm not to have this candlestick. That's not the correct way of viewing it. And this is your high time frame drawn liquidity, right? And price does this, right? The pattern, can we say? We can say that we have a turtle soup, macro structure break, and then price is likely to trade higher into this high, right? False. Because this is the best this is the drawn liquidity. This is the place that you're looking for price to draw and reach down to. And if this drawn liquidity is indeed correct and it wasn't met yet, this means that is going to be this low is going to be viewed as a retracement low. This also low is going to be viewed as a POI. This expansion swing, it's not going to be viewed as a displacement slow. It will be a retracement expansion. It's not going to be viewed like this, but it's going to be viewed as a fake OTE. So if you want a short here, you can take partial 1 year. Another, a potential like uh, retracement to then continue low into your high time frame objective, because that's all it is. You need to have a high time frame drawn liquid. This was mine. I'm going to draw this horizontal horizontal line, meaning that then after Tuesday made this low, I was inevitably looking at Tuesday low. Of course, that when it happened, I think that I mentioned on Wednesday. If I go here, looking for lower prices, but aware that current market conditions. So on the Wednesday forecast, before this Wednesday big bulky candlestick, I was already mentioned that yes, I want to see shorts, but currently, because we're below the weekly open with this Tuesday low of the day being made, taking the Monday low, I'm aware that it's possible that it does not happen. But focusing on the week, uh, I didn't have any key slash special drawn liquidity, but I was looking at any daily low, 4 hour low, 1 hour low, 8 hour low to be viewed as a draw on liquidity. And then I mentioned that these 2 points of expecting, I was mentioning that I want to watch more this week as a warm up after this injury on this injury on quote unquote the past week, so I'm not electing and forcing anything. So I was uh, with a student mindset, not with a trader mindset, which is also a student, but was not forcing my bias, forcing anything. The only thing that I wanted is to study the charts and see what was going to happen. Nothing more, nothing else, and that didn't make me, but that that but that helped me have a winning trade. So ending this because I'm actually sick. The first thing to notice is the SMT between the average, not average, but indices, not indices because, but between the pairs in this case, where the XY already met the key one objective, the key one I in this case, not objective, and on EU or GU, the key one low, which is proportionally inversed from the XY, wasn't met yet. My opinion is that I would like to see lower prices yet, because I'm viewing this as a head and shoulders to generate sell side expansion. Sorry, pop above an eye to then continue lower on the downside. Same thing on GBP. Sell side, buy side taken, discount, deep discount to generate more sell side liquidity. Look at this sell side, sell side, sell side, sell side, sell side. So is there a lot of sell side being engineered, followed by a pop above an eye, which is then more likely to eventually reach lower after not being able to break above the range equilibrium slash the midpoint of the range. Same thing on the XY. So that's why I'm now watching more than trading, because we have the SMT right here, right? Q2 low, Q1 low, Q1 low. I'm going to put in the weekly view. Q1 low, Q1 take. I would indeed SMT, right? Fair value gap, order block, and price is indeed more likely to trade lower. Yes, I can see lower prices being more favorable. After especially an I being taken, a monthly I being taken, in this case a Q1I, everyone is buying. So everyone is buying and is putting the stop loss around this low. So this low is a potential, and especially this low right here, this low right here, there are all potential stop loss placements from anyone trying to have like a one-to-one or a more, you know, bigger type of long-term trade. So this, if indeed lower prices are met, this could be a potential place for a drawn liquidity because there are a lot of sell side here, a lot of sell side here, so on, so on. But I am more on the side of fading this SMT, and indeed higher prices are going to be viewed. That's my opinion. I believe that it's going to create something like this on this week, like a lot of sharpness probably, and that or like this one right here after an FFP Monday, Tuesday, no. Some kind of consolidation to accumulate more sell side, take one sell side out before going upside. So my opinion is that this SMT is not going to be working and that the higher prices are going to be viewed, but that's an high risk probability, high risk idea, not an high probability. The high probability is indeed the turtle soup with SMT, break below low, fair value gap and other prices. So there's now a battle between my ego, wanting to be right of higher prices, and what I know, what I experienced, and what I viewed with my eyes and was taught about trading, which right now indicates lower prices. So there's no point for me for waiting, watching, and then seeing what's going to happen next. Now going to the week, which is for some sense, the easiest thing. I think that not the hardest, but I'm not starting to understand, but you need to have you need to have an why the market is going to move, and that why is birth with everything that I've talked on these 10, 20 minutes, 23 right now, and then the trade comes next, then the analysis in the week comes next, because there's a lot of narrative, a lot of things that need to be checked, thought, uh, forecasted, well planned, etc., before you can even go and attack and try to trade and make money on the week. So on the weekly candlestick, what you can see, a big discount week, a big, not a big, but a medium premium week, and a medium body, so like an equilibrium candlestick. With opening, trading below the previous week low, trading below this low, reaching into this, once again, order block, which I really don't believe that it's going to be protected that much. I believe that it is a fake head and shoulders, a pop above an eye before going lower. That's my whole idea. Uh, After it, on the daily chart, we can see that we have a Monday opening, immediately expanding lower with the news, remembering the news on Monday, Tuesday, Wednesday, Thursday, Friday, and FP. So Monday opens, respects the Friday high, and immediately expands lower. So this is already a tipping point for you, because if indeed Monday is going to be the eye of the day, it's not going to expand, right, like this. If indeed you are going to see Monday be the eye of the week for a candlestick, it's indeed going to be on the upside, and then the daily eye, second change instead of delivery, it's going to be the eye, or it's going to be a small candlestick, like a weak and heavy Not heavy, because heavy needs to be bulky, but a weak candlestick. And not a bulky down close candle on downside, making everyone immediately want short. And that's the whole idea on this change in state of delivery. Is that we have the weekly open right here, consolidation, we're respecting the Friday, and immediately with the news at 9 and 10, price drops lower with so much energy. So immediately everyone is wanting to chase lower prices. While everyone is trying to chase lower prices, let's see if there's an SMT. Yeah, kind of an SMT. But everyone is chasing lower, and the market gives them that lower prices. There's buy side resting right here. There's buy orders resting here. In this case, sell orders because some people are trying to buy this low on Monday, but most of the market is selling. So how do you make even more sellers want to sell? You then have a false breakout. So after a big down close candle, a big expansion swing lower, it retraces and then it trades once more into a low. So bearishness, retracement, and more bearishness. What does this create? This creates that everyone bullish right here is now flipped into selling. So imagine that you are buying right here, right? I was buying this, expecting this to be the low of the day, low of the week, and then I was taken. So many people, when their stop loss are taken, especially on this, on when the stop loss is at a low or a high, then they're going to reverse their positions, just like this, and expect lower prices into, I don't know, this low, right? And then what happens next is that time is more important, 2 a.m. The logic is more important, and their pattern trading is then completely violated on the upside. So Monday we have a small accumulation on the first 12 hours before sending price lower with a big candlestick below the previous week low in some of these liquidity pools right here, respecting this fair value gap. So this fair value gap was traded to on the 1 hour 4 hour candlestick. So after a big candlestick, price then creates an inside candlestick, another inside candlestick as a retracement, then trades once more into this low. So everyone at this breakout is wanting to short, expecting lower prices, whereas smart money is accumulating. Why is smart money buying right here? Because right here 99.999% of people are selling. Everyone right here is selling, selling, and selling. It's a breakout lower after a big bearish day where everyone wants to be short. So immediately they want to chase this. It's easy money, right? Bearish Monday, some bullshit news saying that the market is going to crash, and they immediately sell. Every pop they are trying to sell it, sell, especially when a low is taken, uh, inducing their idea of a breakout lower, when it did four, 3 4 hour candlesticks lower, creates a 12-hour order block before then being closed above at this fair value gap, followed by this retracement lower, making this Wednesday the low of the day. Right here, trading below the other range low, respecting this intermediate low. Turtle soup, big expansion on the upside, above the weekly open, trading above the Friday high, Thursday high. Immediately going to the Tuesday high, which was the March week 4 high, then into this key level right here, which was on fair value gap, making the Friday high of the week on the second half. Thursday high of the week, followed by the Friday opening price, then NFP trading lower back into the range which I was expecting a bearish down close candle right here, closing right here, to make like the weekly open to weekly close, and then with the wicks. But indeed, then price immediately retraced higher, closed the candlestick above the busy, and that was all of it for this week. So I think that's all. Yeah,